On the eve of our 75th Independence Day, the journey of the economy and the financial markets, even over half this period, is truly remarkable. Even if we start from the 1991 liberalization year, the economy has grown from a GDP of $275 billion to $2.97 trillion of GDP in 2022. That's a 10 times growth. The country's rank in terms of the size of the economy has risen from 16th to 6th, and we should very soon be 5th in terms of GDP growth. In terms of market capitalization, the BSE 100 companies have grown from just $45 billion in 1991 to $2.12 trillion as of March 2022, a 48 times growth. Now, what are the key successes of our journey? And where have we lagged in terms of financial markets in particular? I have with me someone who has been a keen watcher of and a key player in the investment field, especially since the 90s, Manish Chokhani, Director, Enam Holdings. Manish, thank you very much for joining us. And let me admit, I have borrowed one of these numbers from a presentation of yours, which I saw. But you tell us, what would you say qualifies as our successes in the past 75?
Yes, first of all, Lata, thanks for having me, and a happy Independence Day to all my friends who are watching and to the entire team at CNBC. As you rightly said, I'm a child of the liberalization era. The last 30 years have indeed been very glorious for India. And as you rightly said, the GDP has gone up, almost tenfold. Our engagement with the external world, which is our imports and exports, when you combine that, we've gone up 20-fold from what we were in 1991. And as you pointed out, the market cap is up more than 50 times in this period, and all this in dollar terms. So it's clearly telling us that we did something right over the last 30 odd years. And I can sit here, first of all, and sometimes things we take for granted. The fact that I'm alive, we could have been in Pakistan or Afghanistan, and God knows what would have happened to all of us and whether we would have even been around. We got educated over here. A lot of Indians have gone all over the world and made a name for themselves, running the largest corporations, indeed some of them in the highest echelons of government in the world. So Indians have done well. We all know the great story of the remittances coming back to India from the Indian diaspora. We know the grand success story of the IT sector over the last 30 years, which has raised the flag of India all over the world and given us so much respect. Today, we are self-sufficient in most of our agricultural products. We're self-sufficient in most of our industrial products. The biggest thing of all, Lata, is we are sitting here together and talking freely, which we cannot say for many other countries in our immediate neighborhood. So the vibrant democracy which has kept this country going is something to be really happy with and to embrace what has really happened over the last 30 odd years. Our institutions are there, the judiciary, the media, now of course RBI, SEBI, IRDA, all of these institutions are up there, and there is a rule of law. It's really the era when we think India can surpass. And why stop at number 5? I think it's a matter of time. In the next decade, we will be probably the third largest economy in the world. And our per capita income, I'm very hopeful, will cross even $5,000 per capita.
But now, Manish, let me come to the harsher questions. Where do you think we have fallen short? I mean, it's a great progress, but it looks like others have done better, notably China.
Of course. So, well, we are investors, so we always look at whether the glass is half empty or half full. So what we've not done is what really lies ahead of us. And it's rightly said by someone that if you're not socialist when you're 20, there's something wrong with your heart. And if you're not capitalist by the time you're 50, there's something wrong with your head. So India, I think, made the choice in the early years of turning towards socialism. And I think we didn't pivot at the right time. While liberalization happened, we didn't kind of accelerate the way one should have. And that's led to the lag with a country like China, which, similar size population, similar size issues, very different government system. But the caliber of people is by and large the same. And today, China is 5 times the size of the Indian economy. And I think the miss we did, unlike China, which pivoted hard from communism towards really a controlled capitalist society, is our excessive, tilt towards socialism. And what that's done is, in a way, it's collapsed the government's ability to fund infrastructure, to fund health, to fund education. So the skill levels, the health, productivity of the country is lower. We all are now facing the problems because we are not adequately facing up to the military expenditure. So one big failing was really that. The second was we completely missed the plot in terms of getting externally oriented and having external benchmarks, looking for energy security, looking for military kind of self-sufficiency, building up skill sets of India and going really after exports in a mission mode. And we've remained in a kind of follower mindset कि ये चलता है, and we are doing better than the past, and we are going from 4% Hindu rate of growth to 7%. It's We are not creating global brands. We are content remaining exporters of commodities or services or generic drugs and so on. And again, nothing to take away. We've done a fantastic job over there. And without these IT services exports, without the pharmaceutical exports, without our engineering exports, God knows where India would have been when we just look across the border at what's going on. So we've had great achievements. But like I said, it's been the lack of a leader mindset, which says we are really a country which can take on the world, and we have the resources. If you look at the rivers and the mountains and the human resources and the skill levels and how we've kept our culture alive despite 700-800 years of foreign rule, keeping all the ancient traditions going, keeping the spirit of enterprise alive in India, and business thriving. A lot of these things actually were just taken for granted and have withered away. But I'm glad that all these changes are actually already happening. And that's what keeps us continuously optimistic about what lies ahead for India. So it's a journey which is half complete, but the next decade and two look even more exciting.
We thought we were unleashing a second digital revolution when we saw that flood of foreign money, VC money, PE money coming into digital startups. Do you think that revolution can still continue? The extent of flood of money we saw last year is not getting repeated this year. So would you worry that foreign capital is not going to be available for the next couple of years?
Lata, that's not the case. I think what you're seeing, of course, is withdrawal of the stimulus which the West had unleashed after the global financial crisis. And then they doubled down on that bet during the COVID period. As that money recedes, it obviously will convert the bull market which has occurred in the developed world and especially in the US into something which will spread across the world. And like with every bull market, like with every economic cycle, countries go through their ups and downs. I think the West, especially Europe, certainly the UK, Japan are certainly on a back foot. The US has displayed, of course, remarkable tendency to bounce back time after time. So one will hold sort of comments over there. But the markets have to go through their cycle over there. And this money which is unleashed in the world is going to look for the highest return and the highest growth rates. And again, like we all are very, very sure that when you look at India, you're certain you will have growth rate. You will quibble over whether we'll grow at 5% or we'll grow at 10%, but you will grow. In those countries, they have a fundamental issue that their ex-growth, the demographics are old, there is a lot of debt, and the problem they were battling of deflation has now converted into a battle against inflation. But it's still an economy short of growth and short of resources. And a lot of the bull market, which was based in these economies on the flood of cheap goods that came from China, the flood of cheap people, skilled people who came out of India, the flood of cheap energy that came out of Russia and Saudi Arabia, all these are unraveling as we speak. So in some sense, globalization is in retreat. And when that happens, you look for countries where you feel there is stability, countries where there is growth, and India becomes a very, very leading contender. Even from the erstwhile BRICS, you can think of Brazil falling by the wayside, Russia falling by the wayside, China falling by the wayside, with a lot of self-inflicted goals. India certainly stands out as a destination which is going to continue to attract serious money and become an asset class in its own standing. And as you inevitably will become the fifth largest and then the third largest economy in the world, the share of global money coming into India has to accelerate. So I would not take this temporary setback as anything more than mere temporary.
Okay. No, that's
the long-term
very
trend line is very, very robust.
Our savings rate appears to have peaked off. There is a great deal of government dis-saving, even if corporate saving is very good. Would you say, therefore, a 7% run rate, which we have aspired for, 7 to 8%, is at the moment a little challenging, starting from 24. This year, we have the benefit of a low base. Is that a challenge? And likewise, is a 15% return from the markets, which we have managed, for a better part of the last 3-4 decades, is that under challenge?
So there are two questions here. One, of
Yes.
course, is about the real economy, and second is about markets, and I'll take it one by one. So in terms of the real economy, see, when certain fundamental reforms such as GST, such as RERA, the whole JAM Trinity, which has happened, the ONDC network, which is now coming out, these are laying the blocks for actually velocity of the economy to increase. And this is, as I called, the pivot away from the erstwhile socialism, chalta hai, toll booth, government or officials extracting money from the citizen. This has turned the shoe completely on the other foot, where you can allow people who are compliant, who are organized, who know how to scale, to run much faster. So when you're seeing a K-shaped recovery, the person who was GST compliant, the person who had clean set of accounts, he had access to bank financing and so on, they are able to run a lot faster. And the corporate sector, which is listed, is naturally a big beneficiary of that, because they tend to be even more productive and even better organized, than the larger economy as a whole. So from an economic perspective, I think even if we are taking a step back, I think the acceleration really lies ahead of us. We are on the cusp of a massive capital expenditure mela, as Mr. Birla had said it, festival of capital expenditure lies ahead of us. This whole unleashing of the entrepreneurial energy of the youngsters, with ample capital available from the world and indeed from Indian offices, where family offices have flourished. A lot of money is coming, as you know, into the mutual fund. So capital is not a dearth anymore. The policies are getting better and better in favor of business and more friendly. The ease of doing business rankings may not be where they wish them to be, but they are a big improvement from our 160th rank. We are hopeful we probably end up, in the top 50, although we should be getting to the top 3 or 5. But it's all the trend lines are in the right direction. And from a market return perspective, Lata, you've seen there are always sectors and there are always companies which outperform. And I do think there's no reason to doubt that this country will give you a 15% compounded return over a decade. We make 4 times, in a decade. Most people should be happy with that. We guys, of course, try to go, 10 times in 10 years. But somewhere within that, you're still going to get infinitely more wealthy. And I'm very hopeful we get to a $5,000 per capita, at least at the end of a decade from today.
Well, Manish, let me stop you there because we're out of time on Bazaar. To our viewers, just a word. I'm going to continue my conversation with Manish Chokhani, and you can get to hear the rest of the conversation later on in the day and over the weekend. For the moment, time for Chartbusters.